Bank of Canada raised the overnight rate from 0.25 to 0.5%. First time in the last 4 years since 2018. Everybody was expecting it, the market was already pricing in, but the question is how this is going to impact the Canadians' purchasing power, because as the rate goes up, the interest on the payment will also climbing up accordingly. But in the light of Ukraine and Russia war, where the commodity pricing is going through the roof, especially oil and gas and wheat, how this is going to further inflate the pricing for Canadians and overall economic conditions. So in this video, we're going to touch about that. Without further ado, let's dive in. If you're new to my channel, my name is Yasin Nizami and I make these videos to educate my audience about real estate market in Canada, macroeconomics, finance, technical sales. And if you are interested in any of these topics, feel free to subscribe so that you don't miss any future content. So back to the topic. Everybody was expecting the rate hike since last week. In my last video, I told you that, pretty much all the economists are expecting it. The market was already pricing in and we saw the rate hike came in. But if you look at the Bank of Canada's Governor Steve Mackram's monetary policy update, he mentioned that the decision was based upon the strong economic growth came in the last quarter of 2021, and now they're saying that the Bank of Canada is on the path of rising rates gradually based upon the fact that stimulus that has been pumped into the economy is not needed anymore. The economy slack that we saw during the pandemic has been disappeared. But in the light of Ukraine and Russian war, where we're seeing the commodity pricing is going through the roof, like if you look at oil and gas, especially the oil prices is crazy these days. It has gone over $100 a barrel, and history shows that in the last 50 years, pretty much all the recessions were followed by the spike of oil prices, especially when it goes above the 50% of the rate of change in a very short span of time. That has been followed by a recession in the economy. This is also one of those moments where if we look at the historic trends, we have seen the oil price have gone up 50% in a very short span of time, which may mean that we are approaching recession, because there are so many other factors that determine or predict the possible or potential recession coming soon. I think one of them was yield curve, and I covered in one of my previous videos where if the yield curve gets inverted, that's also a very predicted indicator that shows a potential recession is coming. So in the light of all these economic challenges in front of us, I think the rate hike is little too late, because we saw the damage was already done in the property market. The market has gone 30% national year over year. The lower interest rate was one of the major reasons why we saw a frenzy market in Canada. If you ask me, what's happening on the ground, because we realtors connect with pretty much all the realtors in the market, we have seen the market has already peaked last month. And what we're seeing right now in the market, that a lot of listings are being relisted with the new pricing, because offer days, they're not getting a lot of offers, and they're basically relisting with different price. A typical strategy from a realtor perspective. What it shows that the housing market is slowing down with regards to activity. As the inventory comes up, the buyers will have more options in the market, and of course the frenziness that we saw in the past slowly disappearing. And this is the psychological impact in the market. When we see the rates start to go up, then it will make the mortgage payments a little bit more expensive. The fixed rate mortgage has already gone above 3%, so we are pretty much getting there where we used to be before pandemic, but the variable interest rate is still around 1.7, 1.6%. And as the overnight rate goes up, this will immediately push up the variable interest rate as well. But the key thing here is, because we are starting from very, very bottom right now, 0.25, even 4 hikes, 5 hikes will only bring the overnight rate to 1.4 or 1.5%. That is still not very high interest rate compared to the history, but these rate hikes are going to do a lot of damage in the economy, because Canada is one of the most indebted nation in the world, right? If you look at the amount of household that we have in Canada, it is unparalleled to any other nation in the world. And as the interest rate goes up, I think I've talked about in my previous video multiple times, it makes the debt servicing ratio more expensive. So if you're paying, let's say 40% of your income towards your debt payments, rising interest rate will make those payments even more expensive, assuming you are on variable rate, which I think pretty much most of the people who were buying property in the last 2 years were on the variable interest rate. So this is going to impact significantly going forward to the household who have a lot of debt taken in the last 2 years. Now think about the car loans, think about the credit card payments. If you have taken all of these debts, the rising interest rate is going to make your interest payment on those debt even more expensive. Now think about that. This is coming at a time where we are seeing the commodity prices are going through the roof. Like the wheat prices internationally is going crazy because Russia and Ukraine are one of the important exporters of wheat. And not only that, Ukraine is one of the major exporter of platinum and titanium and platinum, which is used in semiconductors. That will even make the chip shortage issue even worse. We saw the supply chain disruption has caused the chip shortage, which has contributed towards rising prices of electronic devices and automobile industry. Now this will even make it worse. Not to mention the oil and gas. This is where everything is being observed at a ground level. Like oil is the bloodline of the global economy. Like everything is impacted as a result of oil price. If the oil price goes significantly up, this is going to impact pretty much everything. The commodities, the clothing, the food, the power, whatever we use in our daily life is impacted as a result of price of oil and gas in the economy. So the economic outlook is not very bright, to be honest, globally. And of course, it is going to impact Canadians as well. Going forward, think about that. While the economic outlook is not very good, and at the same time Bank of Canada coming in and rising interest rate, and not only that, they're also indicating that they may start doing quantitative tightening at some point. Now quantitative tightening, or QT in short, is an opposite of quantitative easing. So in the past 2 years, Bank of Canada ran a program called QE, which actually expand the balance sheet, provide banks a lot of capability to issue more credits, more loans in the market, which actually increase the broad money supply. Is one of the factor of inflation. But now if they're opting to do QT, which is opposite of that, which means they will shrink their balance sheet capacity, which will actually take a lot of dollars out from the economy, which will even make money more scarce or debt even more expensive. So that will definitely trigger, or most likely trigger, the recession going ahead. So what is recession? Recession is a time when the economic growth is very slow or even going negative. So I think we are likely to go into that direction if things continue to go like that, because if the prices of commodities and oil and gas are keep rising at the same time, if the interest rate goes up, we are going to make consumer spending even less and less going forward. Not only the housing, but pretty much everything. So from a housing perspective, I think what I've shared with you, we have seen the market has already peaked last month. Now with the rising inventory levels, with rising rates, this is going to have a psychological impact in the market, and the buyer will start taking a step back in terms of buying real estate properties. And that's pretty much it from my side. I hope this is helpful. If you like it, give me a thumbs up and hit subscribe, and I will see you in my next week video. Take care.